Hello everybody, hope you're doing well. It's Lane here with MetaShackle. I just wanted to show you something really quick. Now I've found that using the 508-day moving average is working very well. Now 508 might seem like a strange number. A lot of people use the 50, the 200, the 400, but 508 is phi plus pi. And I've noticed that this number has a very strong significance as far as the world of trading goes in certain instruments, especially with XRP. So by switching it to a 508 day, if you go to the 15-minute chart, you want to stay on the 15-minute chart. If you go back to the elections on the 5th, you'll see right here that we pulled below. Then on the 5th, we broke out above during the count. We went down below. Then about the time Trump was announced the president, we came down, binked off of it, and broke away from it. That first breakout right here. Now you'll notice from that point on the 5th, we didn't come back and touch the 508 again for 15 days. We came down here and touched on the 20th. It just wicked through. Again on the 20th, wicked through again and wicked back up. There was never a full body candle close below. And then right here on the 21st, we came down, touched it again. We never actually had a full candle close below. Now with a full candle close below, what you want to see is the body and the wick of the candle below. It didn't happen here. It played through the line. It took about an hour and 15 minutes. Then it broke out again. So you notice once it came down and touched here, the price never again went to that level. Came up here, dropped back down. Price never came back down to this level. Came up, touched. Once it touched this third time, price broke out. It stayed completely away from the 508 average, came up. This is the high that we hit at about $1.63. So this is the consolidation that we've had that's freaking everybody out. During this consolidation, we actually came back down and touched the 508 one more time right here. Now this spot, let's see, this was on the 24th. This would have been the best entry point. We wicked through it, and one 15-minute candle pulled up. The price never again came back down to this level. We've pulled up, hit a high right here. You can see just from the time it wicked through there and came up to this high, there was a 20% gain just in that one move. So the rest of the time that we've been consolidating, we've come close, but we still have not come back down to touch this. So what you want to look out for is if we continue moving upwards and we head towards the $1.85, $2 plus level, keep your eye on the 508 moving average, because if it comes down and touches it, that's going to be a great point to enter a trade. Now if it breaks through and you get a full body close below with the wicks, especially a few of them, that might be a good indication that it's time to go short. But one thing that I would do is if it does break below, you do get a few candles closing fully below the 508, move to the 1-minute chart and then go short on the first presenting fair value gap. Don't just go short. Wait for it to prove itself to you. And if you miss the first one, wait for it to retest this line. Now one thing's for sure is you don't want to just put a trade on to trade. You want to look for your opportunities. So if you're a conservative trader, that'd be a great spot to look for an entry, is just keep your eye on that 508. And if the price pulls back, for example, to where we're in this wedge right here, if this wedge continues to work this direction, eventually it's going to come into contact with this 508 again, which could present the perfect buying opportunity for an entry for the move up. And then of course if we do break to the downside and we come down, you'll see it come through the 508, get some movement below, then you can go short using the fair value gap. I like to use fair value gaps for my entries. They're very consistent As you can see right now, I have a buy order on. I was just looking to make a quick snipe trade, and I entered off of this fair value gap just above here, just looking for the price to maybe move up into this area, maybe like anywhere from about 2 to 2.5%, somewhere in there. Come up and challenge these highs. We made a small break of structure right here. A lot of times you want to look for these market structure shifts, so I think it would be possible that we would get a move up right here just above this and give us another market structure shift, but then it'll likely pull down and come up here again before it makes a move upwards. I think the bias is definitely leaning bullish at this point on these charts. It's kind of slowed down a little bit now, but if you sit here and pick through the gaps, you can see all these gaps that have formed. It's kind of showing the fingerprints of it being a little bit more bullish. Anyways, I hope you find that helpful. I appreciate you watching. Have a great day.